Now, we saw Perpetual selling its selling out of self-managed super, and AMP is actually going the other way. They bought Cavendish, the big, actually the biggest self-managed super fund administration firm in Australia this week. And I did an interview with Craig Dunn about what they're on about. Well, Craig Dunn, your push into self-managed super funds must be a case of if you can't beat them, join them, mustn't it?
So what we've announced today, Alan, is the establishment of a separate business unit to expand our presence in the self-managed funds market, which, as you know, is the fastest growing and now the largest part of the superannuation sector. And we've also announced our plans to acquire Cavendish, which is one of the most respected and one of the larger administrators in the market. And what that does is adds to the portfolio of assets we already have in this space in terms of multi-port, which we had through the integration or merger with AXA.
Well, yes, but obviously the first two letters of SMSF stand for self-managed. That does seem to be the opposite of what you do.
I think in part that's a bit of a misnomer, that description. I mean, what people typically, and all the research shows us, and this is our understanding, what people want in this space is greater control and greater flexibility. And increasingly what the research shows is they also want greater access to investment advice to support them in this area, and also access to retirement planning advice, as well as, you know, the simplest and most efficient administration platform.
Will this mean you have to develop relationships with accountants that you haven't previously had to have?
Absolutely. I mean, the one thing that's very clear in this market is clients that are using self-managed funds place a lot of trust and faith and have very good relationship with their accountants. We want to build on those relationships. We want to work with accountants so that we can continue to work with them and provide them, or help them provide, even better services to their clients.
What proportion of super funds are now SMSF, and what do you think it could actually rise to?
Well, it's certainly been, Alan, the fastest growing segment in the superannuation market in Australia. It's north of now of 400 billion in a segment or overall market of more than $1 trillion. So it's already the largest share, and, you know, if it continues to grow at the same rate, it will continue to be an even bigger part of the market. And that's why it's important that, as I said, we build on our existing presence in this market with our new partners to expand the offering that we can provide in this market through those partners.
So I guess at some point it becomes half the market, does it?
Well, it's possible. I mean, if it continues to grow at the same rate, that's a possibility. I mean, it's not always easy to predict how fast and the continuous rate of growth in markets, certainly in the world we live in today where things are changing very quickly. But it's certainly growing very quickly. It's the biggest part of the market, and I can't see that changing.
Is it fair to say that this is a lower margin business for you than traditional super?
Well, I think that the pricing points and the way it's priced are very different, and I think that's what we're seeing in the market is different segments of the market are demanding different things and want to pay for value in different ways, and increasingly we're looking to meet those different needs. In the end, the client is going to decide how they judge value and how they want to pay for value, and we need a range of different pricing models that deliver to the different demands of different segments.
Yeah, but overall, is it lower margin or not?
Well, I think it is, yes. The margins in this market tend to be typically lower than other parts of the market, but, you know, margins throughout are, you know, under some pressure. People increasingly are looking for more value for paying less money, and that's a reality we face and something that we have to work with.
Thanks very much, Craig Dunn.
Thanks very much, Alan.